Okay, great. Hi, everyone, and thank you for joining us today. Today, we're going to talk about something that's been on our minds a lot lately. So, it's about how US elections might impact the market. So, along with me, I have our research analyst, Atharya, and my name is Vinu. So when we look at US, so US is the largest economy in the world. So what happens there does not generally just stay there. It impacts everything else around. So decisions made in Washington can influence markets in India, be it Sensex, be it the rupee, and even gold prices. So in this webinar, we thought we'll cover some key trends which tell us, which tells us what the history has been, what you as investors or market observers should have an eye on, and by the end of this session, we hope to give you a clear understanding of how to approach this big event. So let's get started. So I am going to be covering a lot of policy-related decisions that happened in Trump's previous regime first, and then I'm going to take you all through what Trump's current agenda for the forthcoming term is going to be. So policies naturally form a very large part of any government's regime. So policies are first brought in, and that is what is going to bring in a financial output for any economy. So we'll first be running through all the policies, and in the second half of the session, Atharya will be taking us through the numbers of what has happened and what is expected. So we'll start with what has happened in Trump's previous term. So we'll start with the economic policies. The first point is going to be about Tax Cuts and Jobs Act. So this was an act that was brought about by Trump, where a big event was to, or a big policy that change that was brought up was to cut corporate taxes from 35% to 21%. So this was a very, very big impact on a lot of businesses and generally for the American tax system as well. So this idea was aimed at stimulating the economic growth for the country. So this meant lesser taxes for companies, which meant more profits in their hands, which meant more reinvestments for these companies, which meant more profits. So the overall idea was to stimulate economic growth and drive profits. But there was a lot of criticism placed around these tax cuts because these were generally expected to be short-term economic boosts. But in the longer term, it was expected that this would bring a lot of fiscal deficit, which indeed happened. So when Trump started, after Trump's administration reduced these corporate taxes, fiscal deficit increased substantially over the following years. But a large part of it was contributed by COVID as well. And another point about taxes is that they also reduced individual tax rates across a lot of tax brackets. But this policy is set to expire in 2025. So if Kamala Harris had come in as the president, their way of setting tax rates for individuals would have been different. What Trump's administration plans is to extend this existing individual tax rate system permanently for at least 10-15 years. And on trade policies, Trump aimed largely at reducing trade deficits. This was particularly with China. So during previous regime of Trump, we saw a lot of back and forth between China and America in terms of their tariffs. So Trump strongly believed that China's involvement with US's trade policies harmed the American industries. So in 2017, China was America's biggest trading partner. So a lot of tariffs were imposed on China. And today, if you see, China is actually America's third largest trading partner. So the impact has generally been very positive, or it has been in line with what Trump had expected earlier, from China being US's biggest to now third biggest. And generally, these tariffs that were imposed on China primarily impacted US companies first because they had to look for alternatives on their supply chains. So there were a lot of increase in costs for components that were imported from China. So this meant a lot of these American companies had to look for alternatives on where they have to be importing their components from. So the overall idea of these trade policies that were implemented on China was to bring down US's dependency on China overall. So be it for smaller components or be it for energy. This was their overall idea. But in response to whatever America had done to China, China also retaliated with several tariffs on American goods, which primarily impacted America's agriculture industry. So we'll move on to some foreign policies that Trump's administration had brought in. First was America First doctrine. So with this administration, their priority was always on keeping America first. So they prioritized US's national interests over a lot of multilateral agreements and alliances. So this approach emphasized on reducing their involvement in a lot of international organizations like United Nations and World Trade Organization. So unless these policies directly benefited US, they were not interested in taking part in any of these. So US eventually withdrew from a lot of these international agreements and organizations, which included Paris Climate Accord, which included Iran's nuclear deal, and also in certain areas of World Health Organization. Moving to China's relations, we just saw a little about China, but Trump's view is that China is US's primary competitor, and they are very concerned about China's growing global influence as well. So all of US's policies has been at limiting China's access to American technologies. During the previous regime, this was one of the primary points that they had put out, and a very big impact or a very common impact that we might have seen around us was with this company called Huawei. So Huawei was a phone manufacturing company, and at that point in time, Huawei was the third largest phone manufacturer. And US had put out a restriction on Huawei using Google's Android OS. And this was very, very big for Huawei because after that, Huawei was completely washed out. Now, Huawei is a big brand in China, but if you take on the global platform, they're not anywhere. Moving on to Middle East and the peace deal. So Trump's administration brokered a lot of peace deals within the Middle Eastern continent. So there they brokered something called brokered something called Abraham Accords. So this facilitated an agreement of bringing peace between Israel and a lot of Gulf countries. So these Gulf countries included UAE, Bahrain, Sudan, and Morocco. And another move that the administration had pursued was to reduce a lot of military involvement in the Middle East. So this included withdrawing troops from Syria, and they also initiated negotiations with the Taliban eventually, which ultimately led to a chaotic exit of US from Afghanistan. So this was all in 2001. And moving on to what were some achievements and challenges that Trump's administration in the previous regime had faced. So the first one, let's look at pandemic economy. So Trump, being a businessman, he was very, very josh about giving a lot of incentives towards businesses. So the economy was already experiencing steady growth. So there was GDP increase quarter after quarter. Unemployment rates were at historic lows. And the stock market also saw significant gains. They were hitting all-time highs. So this was mainly attributed to a lot of business-friendly policies that Trump had brought in, a lot of tax cuts and deregulation that they had brought in. And at that point in time, consumer confidence was also very high. There was excessive spending that was going on, which contributed to economic expansion. But there was one concern that was generally put up, which is that income inequality was still a thing, and wage stagnation remained to be issues. And regarding immigration policies, the Trump's administration prioritized stricter border controls to reduce illegal immigrants. So a significant aspect of this particular policy was to construct a wall along the US-Mexico border. So this wall is, as we stand today, this wall is not fully complete. It's only 50% complete. And it's with the new administration, they're expected to bring about a lot of spending towards this wall. And in terms of executive orders, they had placed some restriction on travel from certain Muslim countries, citing national security concerns. But these orders were faced with a lot of backlash, saying this was very racist of Trump. But these bans were eventually faced with a lot of legal challenges and were modified and removed over time. But a stricter immigration policy still continues to be there, and it has affected a lot of industries which are generally reliant more on immigrant labor. So this includes industries like agriculture, technology, and the services industry. And Thirdly, when we look at how Trump's administration had handled the COVID-19 pandemic, so COVID had come exactly in the middle of Trump's previous regime. So he started out in 2017 and COVID had hit in 2019. But Trump had faced a lot of criticism for downplaying the severity of COVID-19. So they were not very strict lockdowns, or there were no restrictions on putting masks or vaccines. So there was a lot of mixed messages that Trump had put out, and there were very inconsistent guidelines. And the result of this was pretty drastic. So US, if you see, they during COVID, or overall, if you see globally, US faced the highest number of infections, and they faced the highest number of deaths as well. So this goes on to show how lightly COVID was taken by the Trump's administration. But eventually, once things got a little more serious, they did take some actions on rapidly increasing manufacturing and distribution of vaccines. And a lot of stimulus packages were announced. This was a pretty big thing. Stimulus packages which were announced during COVID had this included putting money directly in the hands of individuals. This included some unemployment benefits, and it also offered support to a lot of small businesses to sustain during this period. So, in conclusion, if we see, uh, sorry, yeah. So, in conclusion, if you see, Trump's presidential term was quite eventful. So, there were a lot of big changes domestically and in international policies. So, his decisions generally shaped the U.S. economy in terms of global trade, and even in the way that people viewed the government. Because Trump was a businessman, and there was a lot of doubt about him as a politician. Supporters often highlighted how he focused on growing the economy by putting America first. So, by being a businessman himself, there were a lot of good initiatives that were made for ease of business. So, these were good things. But on the flip side, critics usually pointed out that there were concerns of a weakening democratic norm. It was becoming an even more divided society, US in general, and there were also concerns on deteriorating relations with other countries. So it's important to look at these impacts from both sides, because given how so it's important to look at it from both sides, because this gives us clues on what future Trump's future administration could also mean for US and generally other surrounding economies. So let's quickly also touch upon what Trump's agenda for this term is. So again, on economic growth, he looks to reduce taxes further. So last time we already saw that he had reduced corporate taxes from 35% to around 20%, sorry, 21%, and now he expects to reduce it further from 21 to 20%. And for companies that manufacture their products within US, they want to reduce taxes even further down to 15%. So this is all done again with the idea of boosting economic growth and creating a lot of jobs for the people. And individual tax cuts, again, it's set to expire in 2025. They may permanently extend it from here on. That's the expectation. The second point is on deregulating industries. So Trump wants to make running a business in the US very simple. So he has generally been very vocal about how industrial growth is growth for the economy in return. And this time around, he wants to reduce excessive regulations and bureaucracies that are there for businesses. And this particularly for the energy and the manufacturing industries. So overall, this administration wants to reduce government intervention in companies and markets. And one other thing that startups could be celebrating is that there's going to be a lot of reduction in barriers for mergers and acquisitions. Moving on to immigration policies. So for Trump, he's been very vocal about restricting illegal immigrants in the country. So this is what had caused him to build the wall. So as I mentioned earlier, only 50% of this wall has been built so far, and the other 50% is expected to receive a lot of funding from this regime onwards. It was halted during Biden's regime. And the administration now wants to increase deportation of undocumented individuals. So there were a lot of illegal immigrants that had come into the country. I mean, this has been a problem for US for a while now. Under Trump's administration, there were around 2.4 million illegal immigrants that had crossed borders, and this actually increased to record highs under Biden's regime, where it became 8 million immigrants during his overall period. Biden's focus on immigrant restrictions was very lax. So this is something that Trump's administration will look to fix. They'll bring on very restrictive immigration rules for legal workers and even student visas. And in terms of energy dependence, Trump's administration seeks to ramp up extraction and production of fossil fuels like oil, natural gas, coal for United States. So globally, if you see a lot of economies and even Biden's administration have been going on about incentivizing renewable energy sector. So on the contrary, this time Trump actually is very keen on providing incentives for fossil fuels. So he wants to roll back on a lot of the green initiatives that the government has already taken. Because so Trump seems to believe that the green initiatives that are in place and which could potentially be coming into place in the future will be hindering economic growth for the country. So there is a lot of plans to cancel a lot of incentives and subsidies for the renewable energies industry from here on. And all energy, all American energy regime is what Trump's idea for this regime is. So what he wants to do is Trump's idea is to create an economy that is self-sufficient for its energy requirements. So they don't want any involvement of any other country for US's energy requirements. They want 100% of energy requirements to be fulfilled within the country itself. So he plans to increase a lot of infrastructure spending related to domestic energy production within the country. And on foreign policy, it is again expected to be tougher for China. As I mentioned earlier, there's been a lot of back and forth in terms of tariffs. And this time, there is an expectation that there will be an implementation of a 60% tariff for Chinese goods. This could be huge if it is implemented. And there will also be some increased restrictions on Chinese investments in US because they see that to be a national security concern. And there's a lot of semiconductor exports also, which happened from US to China, which is also expected to get restricted to a large extent. And if you see in terms of alliances, Trump's administration, the last time there were a lot of concerns stating that there's been deteriorating concerns and they've been losing a lot of friends in terms of allies. This time around, Trump wants to reduce or even completely eliminate financial and arms support for Ukraine. So there'll be no ties, or there'll be very limited ties between US and Ukraine, given Ukraine is amidst a war with Russia. But Trump wants to increase its support and emphasis for Israel this time. So they may be providing some arms and funds from Ukraine, and that may move on to Israel this time. And in general, Trump has frequently criticized NATO for not meeting a 2% GDP spending on their defense. So he wants every country that's in the NATO to spend at least 2% of their GDP on defense. So this has mostly not been met by these countries. And Trump has always been keeping this as a point while discussing during NATO discussions and moving on to healthcare. So this is the final point on Trump's agenda for the forthcoming administration. So healthcare in America is generally known to be very expensive. So in fact, US is the most expensive healthcare system in the world. So if you take, there are a lot of instances where you may know people who've actually taken a flight to India, taken some medical help, and they would have flown back to the US. And this still ends up being cheaper than taking a treatment in India. So to address this, Trump's administration wants to lower drug costs. So there will be a lot of incentives which are expected to go towards the healthcare and the pharma manufacturing sector. And there is also an act called Affordable Care Act. So this act is related to insurance payments, which could potentially make it cheaper for people to get healthcare needs covered under an insurance itself. But he feels this insurance itself is an expensive method to do it. So they're expected to propose an alternate plan, which could mean cheaper insurance premiums for the people of the country. So we will next be moving on to some numbers. So Adria will be taking it on from here.
Thank you, Vinu. So, like Vinu was saying, I'll be continuing from where he left. And to his point on, US spending and in defense specifically, and how Trump wants other countries, especially in NATO, to increase their spending on defense. You can see in this chart that US has been consistently spending roughly around 3% of GDP on defense. Uh, whereas other developed countries, especially in the European Union, they have been spending a mere 1 to 2% on defense. And I think the next administration really wants the other countries to also increase and improve their spending so that the United States can reduce their spending on defense. And broadly, if you take a look at the state of the US economy right now, it's not going to be as easy as it was in the first in Trump's first term to really boost growth. So if you take a look at the debt to GDP of the United States, it's close to 120% at the moment, when compared to 100% in 2016. And even if you take a look at the fiscal deficit, it's doubled almost from 3% in 2016 to close to 5 to 6% right now. Of course, some of it was with respect to an increase in government spending post COVID. But once government spending has reached a new base, it's really hard for that spend to really come down subsequently. And of course, there has been a department which has been created for reducing government spends, but I think it's extremely hard to reduce this deficit, because it's been stated by a lot of economists that even if you remove all government employees from the US government, the fiscal deficit will only reduce by a mere 50 basis points. Therefore, they have to find other avenues to reduce spending. And so broadly, and coupled with this, we can see that inflation has also really increased from 1 to 2% pre-COVID. It's increased to over close to 3% right now, and it's kind of stabilized at 3% at the moment. So, and this is also coupled with the Federal Reserve, rolling down their balance sheet, and therefore and the interest rates also being at a pretty at close to 4.5% compared to 0% pre-COVID. Therefore, if you take a look at fiscal policy as well as monetary policy, both of them are they're not expansionary in nature. So it'll be very hard for the next administration to really give a growth spurt and improve or accelerate growth for the US economy. And moving on to the next slide, um, just a second. Vinu, will it be possible for you to move to the next slide, please? Yeah, thank you. So, um, so tariffs. So the president-elect has stated in various interviews that tariffs is his favorite word in the dictionary, and in his previous term, like Vinu was previously mentioning, you can see that the tariffs on Chinese goods, as a value of Chinese goods, rose from low single digits, close to 3%, to close to 20% by the beginning of 2020. And even in Biden's administration, Biden kind of continued Trump's tariff policy towards China, and tariff policy tariffs to China kind of stabilized close to 20%. And actually, earlier this year, the Biden administration really increased tariffs on various products which were coming out of China in a bid to protect the domestic US economy. So you can see that the tariff rates for electric vehicles rose from 25 to 100%, and it increased for semiconductors, solar cells, commodities like steel and aluminum, and any subsector of the EV industry like EV batteries and so battery parts and so on. Therefore, across the political spectrum, the common theme, or the consensus across the political spectrum is that US manufacturing should see a renaissance, and they want to really reshore a lot of industries, and they are not really happy with the Chinese economy and the Chinese government exporting their worries to the rest of the world. And this has actually been seen not only in the US, you can see it happen even in Europe. So Europe, because a lot of car companies like BYD have been gaining a lot of market share in across the world. The European Union has also increased tariffs to over 50% for Chinese cars. And we can see, and there's been a lot of news about how European car manufacturers have actually reduced their manufacturing footprint across Europe. So, and even in India, there's been a huge impact on various commodity players because of the increased exports, or increased exports into India by by China. So you can see that there are various chemical, or even steel manufacturers who have been hit by the dumping into India by China. And recently, in a media interview, Tata Steel CEO had even stated that at current steel prices, it doesn't really make sense for Tata Steel to go ahead with their capex plans, for which they had actually which they had previously envisioned for the future. Therefore, Chinese dumping has been really a worry globally. And so, if you take a look at US imports from various countries over the past 7 years, the overall quantum of imports has actually increased by close to $600 billion, and it has increased from $2.5 trillion to close to $3.2 trillion. But because of the tariffs, which Vinu had also mentioned in the past, so the market share of China in these imports have reduced significantly by over $100 billion, and that share has shifted to Mexico and Vietnam, and Canada as well. So, but one thing to note here is that a lot of Chinese companies are merely rerouting their exports from China itself. They're rerouting it via Mexico and via Vietnam. So we don't really know what the impact on Chinese companies itself has been. But one thing which is pretty clear is that India has been a net gainer in this entire trade war. So there, in India's export share to the US has increased from 2.1% to 2.7% at the moment. So India has gained in this entire trade war. And if you take a look at which industries have gained in India, there are a few clear winners. And the major winner uh, in the increasing market share of India in US exports is the electronics manufacturing sector. So the electronics manufacturing sector's share in US imports has increased from 0.5% in 2018 to 2.6% at present. And it's only ever increasing. And you can see that a lot of global manufacturers are increasing their uh, electronics manufacturing in India, especially Apple. So Apple is doubling down on India as a manufacturing base, and as they want to diversify away from China. Some of the other sectors which have gained significant share is commodity players like in iron and steel, and textiles and ready-made garment players. So they are also benefiting from the trade war. And India was always a big player in chemicals and in pharmaceuticals, and both those sectors have also seen a big uptick as well. So moving on to the next slide. Um, Now that we've spoken about what the Trump did in his prior in this first term, and what he envisions to do in the current term, let's take a look at what the impact of these policies would be on Indian equities and on certain subsectors as well. So to begin with, Let's take a look at what the impact will be on US equity valuations, because that will also have a knock-on effect on Indian equity valuations. So corporate taxes, like we previously spoke about, would be reduced to 20% from 21%, 20% to 20 from 21% at present. And for companies manufacturing in the US, they would have a special tax rate which is even lower at 15%. And there will also be additional tax benefits like accelerated depreciation and other reductions. And apart from that, there's going to be a leadership change at the FTC and the Department of Justice. And what will happen because of this is there will be an improved M&A environment. So improved M&A environment, lower lawsuits, which will also lead to lower legal costs. So what we have seen over the past few years, especially when Lina Khan was put in charge of the FTC, is that the quantum of M&A which was being done by big tech and big pharma was drastically reduced. There were a lot of litigations going on whenever these companies decided to acquire any other companies. Therefore, a lot of acquisitions also fell flat because of these lawsuits, and there's a lot of litigation going on into anti and in with respect to antitrust and big tech. The legal environment was pretty bad for these companies, and their acquisition strategy was also diminished, or acquisition power was also diminished. However, with the new administration, it is expected that there will be a lot of deregulation, allowing or enabling a lot of big tech companies to accelerate their acquisitions. And so broadly, the merger and acquisition environment in the US is expected to improve going forward. So that is a big positive for for US companies, especially the bigger companies, which will really benefit from this. And of course, even the smaller companies which are seeking an exit will also benefit from this. So broadly, the corporate environment in the US, looking at these looking at deregulations, and because of a reduction in corporate tax rates, the corporate environment is going to improve, and that will of course lead to better equity valuations, as smaller companies will see, there will be possibility of them being taken out, and so people will be willing to pay a bit more, and bigger companies will be allowed to acquire smaller companies, and hence their growth rates also can see some improvement in the future. Therefore, valuations in the US will improve, and that could lead to accelerated flows of global flows into the US, which will mean that FII flows into India could reduce, and could at least decelerate from what we have seen in the last few years, which is negative for the Indian market. And we've already seen some of it in the past few months, wherein FII flows have actually reduced in India. But on the flip side, uh, if you actually look at the tariff policies of the new administration, there was this study which was done, and tariffs broadly, are inflationary in nature, and they will broadly and they will have a significantly higher impact on people on the lower strata of society in terms of income. Therefore, the consumption, and we all know that US is a consumption based economy, and if people are hit because of higher costs, consumption in the US might see a slowdown, and is probably going to see a slowdown if tariffs are really going to increase to 60%, as what based on what was stated prior to the elections. So that is kind of a negative on the US economy. We have to wait and see how it plays out. And with respect to India itself, yeah, I think the president-elect stated in an interview that India is a tariff king, and you can actually clearly see in the chart that India's that does have he does have some credence when he says that. So if you look at India's tariff rates when compared to other players across the world, we are actually one of the highest in the world. So India's very much a protectionist economy. Therefore, we might see some counter tariffs which are being raised by the US going forward, which could be a negative for the Indian economy per se and Indian manufacturers as well. So we need to take this into account when we are looking at the economic changes which are being proposed by the new administration. And moving on to certain subsectors and the impact on certain subsectors. So let's take a look at the impact on the IT sector. So during Trump's first term, there were a lot of reduction in H-1B permits which were being rolled out, and immigration policies were also extremely restrictive. That is expected to act, immigration policies are expected to continue going forward. But the IT sector has, reorganized themselves, and they have really changed their modus operandi, so to speak. So you can see on the chart on the left that the number of H-1B visas which are being applied by Cognizant, TCS, Infosys, and tier one IT companies has significantly reduced when compared at present when you compare it to 2016. So it's broadly 10 to 15% of 20% of what they used to apply for in the past. So acceptance of the outsourcing model has accelerated post COVID, and IT companies have increased their onshoring presence in the past 8 years as well. So the impact of these immigration policies will not be it'll not really have a major impact going forward. And the with global companies, global tech companies, and companies across industries really accelerating their the GCC strategy in India. The tech industries, it is only expected that the boom is expected to continue in the tech industry. If you take a look at the auto industry and auto components industry, we it's pretty. I mean, it's widely known that the next administration is not going to be not going to be in favor of providing subsidies for subsidies for electric vehicles. So there's potentially going to be a shift towards hybrid vehicles in the future, and a reduction in the offtake of electric vehicles. So and another it could also lead to a boost in local manufacturing. So a boost in local manufacturing and a boost in infrastructure investments in the US can also lead to a revival in demand for trucks, which could be a boost for companies which are catering to this segment. And because of a lot of tariffs on China, there could be opportunity for exports from India and FDI investments in India, which is beneficial for the Indian economy as well. And moving on to uh, so let's take a look at the impact on metals and oil and gas. So first, looking at steel. So we saw that the Biden administration had increased tariffs to 25% on imports of steel, and there is potential for increase in tariffs on China. And one worry is that if this happens, there is potential that China would probably reroute those shipments towards India, and they would increase. There's potential for increased dumping in India. Therefore, this is something we need to watch out for. And of course, the Indian government will also be looking at this, and it is expected that the Indian government will probably issue some anti-dumping duty on Chinese imports. But like we've previously seen, there is also potential for them to reroute it via other countries as well. So steel prices, there could be some increased dumping in India, which could affect steel and steel adjacent sectors. Um, and another impact on so there was this acquisition of US Steel by Nippon Steel, which is a Japanese steel player, and Trump has stated that he's going to oppose this acquisition. So it's pretty clear that US steel manufacturers are off the table for any acquisitions, and nobody will be able to acquire any capacity in the US. So there's only potential for greenfield capacity if any manufacturer is interested in. And moving on to oil and gas. drill baby drill is Trump's motto. So he's going to really ensure that he does everything in his power to increase oil supply. And in if you take a look at the chart on the right, the oil and gas lease issuances on federal land, which actually grew under the previous administration, that is under Trump, but it's drastically slowed down under under Biden's administration. So it is expected that federal land being leased to oil and gas players is going to increase in the future, leading to increased oil and gas production in the US. And it is also expected that the president-elect can sway OPEC to increase their supply and remove the cap on supply, which will also reduce oil prices in the future. And this is actually potentially a benefit for India as a whole, as it can reduce the fiscal deficit for India, and it can ease pressure on the currency as well. So if oil prices really start reducing going forward, and it is looking likely that it will, this is a benefit for India as an economy, but for oil and gas players, it is definitely a negative. And moving on to uh, just before moving on to the impact on the bond market, I'll just touch up on the impact on the pharmaceutical market as well. So there was this Biosecure Act which was passed recently, and that is expected that it is expected that basically that a lot of manufacturing will shift from China towards India, because in the act it states that purchases from five to six top Chinese players will have to be curtailed within 8 years. Therefore, exports from pharmaceutical exports from India is expected to increase over the next decade. It's more of a medium term play, but it's expected to happen going forward. And there was also an announcement of a new health secretary recently, and his views are pretty extreme, to say the least. And he's so there might be a lot of there might be there could be some disruption on on the pharmaceutical players in the US, and they have clearly stated that they want drug prices to come down. So there could be some pricing pressures faced by Indian pharmaceutical companies in the US as well. So that is something we need to watch out for. We don't really know what the policy is going to be, because it's not yet been stated, but that is something we need to watch out for as well. So now moving on to the impact on the bond market. So like we previously mentioned, the fiscal deficit is continues to remain at 5 to 6% of GDP, and it is expected that tax rates are going to go down. It is not really clear as to how the deficit, what the plan is to reduce the fiscal deficit. Therefore, if you take a look at the market's interpretation of this, you can clearly see that the inflation expectations, the market pretty much predicted what the election outcome is going to be. And if you take a look at inflation expectations from 2% in September, it's rocketed up to close to 2.5%. So this is the break-even rates, break-even tips rates. Therefore, the market is expecting that inflation is not going to reduce in the future. And even if you take a look at the chart on the right, the despite the Federal Reserve cutting rates to even 4.5% a week ago, you can see that the 10-year Treasury yields and the 2-year Treasury yields kind of bottomed out in early October and rebounded over the past month. Therefore, the market is clearly expecting that there will be some kind that the deficit is not going to come down, inflation is not going to come down as much, at least as much as what people expect. Uh, so uh, broadly, it seems like the yields are going to continue to remain pretty high when compared to the past decade. And this is something, so cost of funds, cost of capital will continue to remain high. And so whether the bond market will kind of influence the policy decisions of the next administration is yet to be seen. It's unlikely that that's going to happen, but yeah, so higher interest rates it seems like higher interest rates are here to stay as well. And so uh, uh, there's also I'll also touch upon the impact on commodities as well. So uh, we after the election results came out last week, we clearly saw that there was a dip in gold prices from $2,700 to 2,500 to close to $2,600. But over the long run, if inflation continues to remain high, gold should do well, as it's traditionally an inflation hedge over the long run, especially for emerging market people in emerging markets like India, where if inflation remains high, our purchasing power gets eroded each year. And the and it was also clearly seen that the next that Donald Trump in his election campaign raised a lot of funds from people in the tech industry in Silicon Valley, from the crypto industry as well. So it is expected that regulation for cryptocurrencies will be eased, and there's expected to be a change in the SEC, in the governance at SEC as well. So it is likely that cryptocurrencies see a massive deregulation going forward, and that has also been baked in post the election results. We saw Bitcoin prices are above $90,000 right now. So we have to wait and see what happens there. So yeah, so broadly, these are the points, and this will broadly be the impact on each subsector and on each asset class as such. And if you have any questions, please feel free to type it out in the chat or in the Q&A, and we'll take it up.
There's a question on how it will impact Indian pharma.
Yeah, so for Indian pharma, yeah, so like I previously mentioned, there was this Biosecure Act. Broadly, kind of it said that exports from or imports from China will have to be sourcing from China will have to be curtailed from the top five biologics players over the next 8 years. So that is a positive boost for Indian manufacturers, as manufacturing or demand will shift from China to India, but that's more of a medium term play. With respect to Indian pharma, we have to wait and see what the policies will be from the new administration. So, Rob F. Kennedy has been appointed as the health secretary recently, and he's famous. And I mean, his stance on vaccines have been pretty clear. He's extremely anti-vaccine, and both the president and the health secretary, president-elect and the health secretary, have stated that their main aim will be to reduce drug costs. So that could have a negative impact on pharma players and on Indian players as well if the pricing environment becomes bad. But we have to wait and look at the concrete policies which are being laid out after the new president-elect gets sworn in. So we need to wait for that.
There's a question on gold and silver.
Yeah.
So after Trump got elected, yes, we've seen a dip in gold and silver prices. So gold fell to the extent of 7-8%, and silver touched even a dip of 10%. So this was mainly triggered by a strengthening dollar. Uh, so there are a number of things. So we continue to remain positive on gold and silver. So generally as an asset allocation rule also, it's good to have some portion of your portfolio allocated towards gold and silver. But beyond the fact of having some money as an asset allocation investment, we feel at this point in time, this is also some sort of a tactical investment to have in a portfolio. So interest rate cuts is one trigger for gold and silver prices. So yes, interest rate cuts were projected to be a little more quicker from the last quarter onwards. But surprisingly, the Fed Reserve have told that they're going to slow it down again, which clearly shows that inflation is still a concern, which is again one more positive for gold. So while inflation hedge is going to be gold, if interest rates are cut, then that's a potential weakening for dollar, which is again something that is strong for gold. And beyond all this, even if we look at production and supply and demand for gold and silver, there seems to be some sort of a mismatch. This is more so with silver than gold. So production for both gold and silver have been flattening over the last few years, while demand has been consistent. Gold demand has been majorly triggered by a lot of buying from central banks of a lot of countries. Russia has been a big buyer of gold. China has recently been a very big buyer of gold. And on silver, there's a lot of industrial demand that is coming into play. If you take the EV industry, the solar industry, a very big component of silver's demand has been from the solar industry itself. Almost 15% of silver's global demand is only from the solar industry. So there's a supply demand mismatch. There are also factors which are relating to inflation, which could play out well for them. There is also a potential dollar risk, which could again play out well for gold and silver. Beyond all this, it's good to have one more asset in the portfolio along with equities. So all of these are points that we should be taking into play.
Got it. This question on the impact on IT companies if Trump presses for visa restrictions. So I think we covered that in the presentation. If you look at the H1B applications by tier one IT companies, it's really it's extremely minimal at the moment. So it's not going to. They've changed their business model. And there's a lot more of onshoring which takes place, and there's also nearshoring which happens. So it's going to have not going to have an impact in even if there are harsher visa restrictions in the future.
And percentage for precious metals ideally, I mentioned asset allocation as part of it. So as an asset allocation investment, 5 to 10% would be a decent allocation. If it's going to be tactical and if it's looking even more attractive, like how we're seeing today, then can even be taken to the extent of 15-20%.
Yeah, there's a question on the Q&A box as well. So Mr. Venkatesh asks, there is a widespread discussion on making a policy for cryptocurrency. What is it aimed at, and how could that impact fund flows towards gold and silver? Um, So, the previous SEC head had actually there had been a lot of legal cases against various cryptocurrency heads, exchanges, and so on, and even the people who had launched certain cryptocurrencies and did a lot of drops. So, uh, it is expected that there's going to be a lot of deregulation which takes place in the cryptocurrency industry. There's going to be more allowances, easier access maybe towards traditional financial products like ETFs. We've already seen Bitcoin ETFs and Ethereum ETFs being listed on in the US. So the cryptocurrency could become mainstream going forward in the US. Well, about how it impacts fund flows towards gold and silver, even when so it all depends. It's more tactical, right? And cryptocurrencies have already seen a huge move up, and it depends on person to person. But we've already even during the past 5 to 7 years, we've seen that fund flows towards gold and silver took a big hit, and it would become an anti-consensus trade because the prices of gold and silver were really falling and inflation rates were really low. And once inflation rates really started increasing drastically, and silver demand from industrial from various industries started really improving. Prices also started rising. So fund flows, it's very hard to predict what impact on fund flows would be. But gold and silver retail fund flows for gold and silver were, even in the past year or two when cryptocurrencies were doing badly, were relatively flat and moderately increasing. But the major demand for gold and silver has been, for gold especially, has been from central banks and Asian countries. So that is expected to continue going forward as well, because of the geopolitical scenario. And we are seeing a lot of tensions across the east and west axis of the world. And it is expected that each country will want to kind of diversify away from the US dollar. And that the biggest buyer of precious metals, or at least gold, would be global central banks. And we have seen that even recently with the Reserve Bank of India, they have been an active buyer of gold. Vinu, I think there's one question on whether the 5 to 10% asset allocation is for the combination of gold and silver or just gold alone. You're on mute.
Sorry, it will be a combination of gold and silver. So it would be good to have a combination. So there's a question about the semiconductor industry in India with the US administration change. So we don't think it'll have a very big impact. So India is actually in very nascent stages with regard to its semiconductor plants. There are a few being put up, but so usually the tiniest semiconductors are usually the ones that require extremely large and extremely energy efficient semiconductor plants. But the ones that are being put up in India, I think they're 28 or 30 semiconductor chips that are going to be produced here, which is pretty widespreadly available. So this is mostly going to only cater to demand within India at the moment. So this is not going to be a chip which is it's not a chip that is very rare. So we don't think US's administration is going to impact this in a large way. I don't think there are any questions, but if there are any questions, so this is our contact details. You can reach us by WhatsApp, by email. So we'll be happy to take them offline and have a detailed discussion on your queries. Thank you very much, guys. It's been an hour. You've been very patient. I hope this gave you more clarity on where we stand post the US elections. Thank you, Atriya.
Thank you. Yeah, thank you, Vinu. Thank you, everybody.